time to get your portfolio queries checked, and I have a very special guest. Every week we have Nisreen Mamaji, CFP Moneyworks Financial Services, who help you out with your financial portfolio, and she talks to you directly and hears out your concerns. Nisreen, hi, good evening, welcome to the show. And let's take Ashish's question. This is by email. He wants to create a corpus of 10 CR in 10 years, approximately 15 to 20% is what he is looking at in terms of returns, and he wants high risk, high return. That is his profile. After 3 years, he wants 4% SWP to be done, and okay, and for that he wants you to suggest him a portfolio. I don't have him on the phone line because I know how much he wants to accumulate in how many years, what's the return expectation also, but I do not have the amount that he wants to invest. Now, without that, I think you will have to just give him a rough calculation as to how much is needed, from him in terms of investment amount. But having said that, let us also do an expectation setting, if I may call that, return expectation setting. 15 to 20%. I mean, just because you're a high risk investor, you're an aggressive investor, 15 to 20%, really, is it even possible? Should one be even considering, even if you're a high risk investor?
It is definitely a very, over expected return, because 15 to 20%, when you start your journey with that expectation, it's very likely that you will be disappointed. Especially, you cannot really judge the, prospective journey of your investments based on historical figures. So if you go with an 11 or 12% kind of expectation of a compounded annualized growth rate, it would be much, much more realistic, honestly. Also, since you have a 10-year plan, you should be reviewing this very, very strategically every 2 to 3 years to make sure that you are on track. Because going forwards, we really don't expect that, a 15 to 20% CAGR would be possible, even if you are a very high-risk investor and you are taking, calls on funds which are going to be giving you a high risk, high return strategy. Having said that, I would kind of, suggest to you a few funds, but there will be a disclaimer stating that you need to get your expectations a little more realistic and make sure that you are on track by reviewing it every few years. So your expectation is 10 crore in 10 years. You're expecting a 15 to 20% CAGR, and you also want to start an SWP in 3 years at the rate of 4% annually. So I would, what I would tell you is that if you get a 15% compounded annualized growth rate, a monthly SIP of about 3.4 lakhs to 3.5 lakhs is necessary for you to be investing. If you are, even more lucky, and if the market gives you 80% return over the next 10 years, then your SIP figures will be 2.6 to 2.8 lakhs per annum. Now, the previous speaker has already spoken a lot on the compounding benefits and the importance of SIP investing, but then also your figures are quite high. So I'll suggest to you a few funds and the ratios, what you should be investing in. So you can go for Parag Parik Flexi Cap. 20% of the portfolio should be invested in this. I've already mentioned your SIP figures earlier. This will be a Flexi Cap strategy, which will be quite good for you. Then you can go for ICICI Prudential Large and Mid Cap. This is a very stable and a growth-oriented fund. That also you can go for 20% of the portfolio. HDFC Mid-Cap Opportunities, 20% of the portfolio, which will be strategically placed in mid-cap funds and also add a little bit of acceleration to the growth potential. SBI Small Cap, which will be slightly more aggressive and would be chasing returns, 15% of the portfolio. One Small Cap, this is momentum-based and very risky, 10%. Motilal Oswal Nifty Micro Cap 250 Index, this also 15%. So this also is a very high risk, and for alpha, I would suggest that. Quant is for 10% of the portfolio. Motilal Oswal Micro Cap is for 15% of the portfolio. Now you're planning, at the end of a few years to also start a withdrawal at the rate of 4%. So assuming that, you have achieved an 18% compounded annualized growth rate, you can withdraw about, 3 lakhs per month. At this point, your corpus will be about 1.3 to 1.4 crores, and you start a withdrawal of about 3 lakhs a month. So, at the rate of 4%, it can go even higher to 37 to 42,000 a month. And so all the very best. This your corpus at year end, at the third year, fourth year beginning will be in the range of 1.3 to 1.4, presuming that you are investing right now 3 lakhs a month. And your SWP is between 37,000 to 42,000 per month, which is about 4% of your corpus at that time. I
Sure.
hope this
Sure.
makes sense, and all the very best.
All right, let's take Chiru's question. He's on the phone line with us from Chennai. Hi, Chiru. Good evening. How are you doing?
Yeah, I'm fine. I'm planning to invest in a GST Flexi Cap fund with 5,000 per month for 30 years by adding a setup of 12%. So what will be the corpus after 30 years?
Perfect.
And also,
all right.
second thing, I'm new to investment. So is that Flexi Cap fund is only enough, or do I need to add any other fund in my
That
portfolio
is what I wanted
build
to
my
ask
corpus
you.
fund?
Right. So, yeah, that's what I wanted to know, because otherwise you don't have any other mutual fund, right, in your portfolio?
Yes.
Okay.
So I'm planning
Perfect.
to add one small cap, but I'm not sure.
A flexi cap and a small cap. Well, definitely you need to diversify your investment. Although flexi cap category is very well diversified across market caps, you have a large cap exposure in these kind of funds, at least HDFC flexi cap or Parek flexi cap. It's mostly large cap biased funds. But having said that, ideally, Nisreen, a co-portfolio should be having a large cap, a mid cap and a small cap. Now he wants to start investing with a flexi cap, which again is not a bad strategy. But having said that, I also wanted to understand if a multi-asset allocation fund and a combination, with a flexi cap, can that work for someone like Chiru and for someone who's taking the first step towards the investment journey?
So yeah, definitely. So instead of the HDFC Flexi Cap, like the multi-asset allocator, any multi-asset fund or multi-asset allocator would be a very, very good option. That would be an alternative to the Flexi Cap strategy. Now, what I've understood is Chiru is, willing to take a slightly more risk. And therefore, of course, HDFC is a great core fund. It's diversified across large, mid, and small caps. But for a longer term, investing and for better risk-adjusted returns, he can have 2 to 3 complementary funds in his portfolio. So I would suggest HDFC FlexiCap Fund. He can continue with that, but he can also include HDFC mid-cap opportunities for the higher growth potential. And as he's mentioned that he would like to introduce a small cap fund, he can go in for a SBI small cap fund for wealth creation only if he's comfortable with the volatility. So having said that, a multi-cap fund is also a good alternative. But a multi-asset fund is a very good alternative for somebody whose risk appetite is slightly lower than what Chiru has shown over here. So that is the good combination for your core portfolio for growth and for some amount of aggressiveness. All the 3 funds, the flexi cap, the mid cap, and the small cap. So that was your second query. And your first query was, what can you expect, after a certain number of years? So basically, you want to invest for 30 years, Chiru. And if your monthly SIP is about 15,500 rupees, your approximate corpus can be in the range of 12 to 14 lakhs. If you're doing a 12% annual step up, and if there's a possibility of 12% compounded annualized growth rate for the next 30 years. So if you're investing for 10 years, you will be investing about, say, 15,500 monthly SIP, and your corpus will be 12 to 14 lakhs. If you invest for 20 years, you should make it about 48,000 rupees, and your corpus will be 1.2 to 1.4 crore rupees. And if you're investing for the entire 30-year journey, and you're investing about 1.5 lakh a month, then you can expect about 6.5 to 7 crore rupees. So that's the entire, I've given you 3 possibilities of 10-year, 20-year, and 3-year, and also 3 SIP figures. So you can build about 6 to 7 crore rupees if you stay disciplined over the last 30 years, the next 30 years, and with a step up of 12%. And also with an expected compounded annualized growth rate of about 12% annually. So all the very best, Chiru. I hope, both your queries have been properly answered.
All right. Anything else you want to ask, Chiru?
Is there any flexi cap fund that you compare with the HDFC, like Parak after Parak? Because HDFC is almost it started from since long actually, but still now it is present. And in future also the HDFC flexi cap will be performing. I thought like that, so I have started my investment. But Parak flexi cap is started from 10 years back.
Sure.
So.
Sure. So yes,
Nisreen,
you
yeah.
can have, an option is the Mahindra Manulife Flexi Cap Fund. ICICI Prudential Flexi Cap Fund is also an option. So there are a lot of good funds in the Flexi Cap category actually. HDFC and Parak Parik, you have already sort of checked and you're already interested in. But you can also look at the ICICI Flexi, you can look at Mahindra Manu Flexi, you can look at the Franklin Flexi Cap. So in Flexi Cap, these are the next few funds that could be possibly an alternative. But as a strategy, I think it's better that you also include some amount of mid cap and small cap, since your term, tenure of investing is slightly longer. So don't get, stuck into only one category at this point, too.
Okay.
Email, he says that he's 40 years old and an aggressive investor. Needs to do an SIP in passive funds only and index funds, Nifty and Sensex, large cap, Nifty 500 or the other options, everything, and international ETF also. And he wants a portfolio of 8 funds specifically, so he can create a retirement corpus of 2.5 crores in 25 years.
Sure. So, passive investing actually as a strategy is a low-cost strategy. You need to be very disciplined and, you need to be very effective over the longer term. So it's good for a very aggressive investor with a 25-year horizon, as you've mentioned. But, do remember that you need to be on track and you also need to review these, funds as you go forwards. So keep on reviewing to make sure that you are on track. So I will recommend about 8 passive strategies for you. 12,000 rupees is your monthly SIP for 25 years. And if you also do a 10% step up and you get a compounded annualized growth rate of about 12%, then you are going to meet your target of about 2.5 crore that you've mentioned. So remember these key figures, 12% compounded annualized growth rate, 10% step up, 25-year horizon, and 12,000 is your SIP. So for that, I would recommend to you Nippon India Nifty 50 Index Fund. It's in the large cap category and you can invest about 15% of the portfolio there. HDFC Sensex Index Fund, it's large cap again, 10% of the portfolio. Motilal Oswal Nifty 500, it's the total market because it's 500, 15% of the portfolio. Motilal Oswal Nifty Mid Cap 150 Index, it's a mid cap fund, so you can invest 15% of your portfolio. Motilal Oswal Nifty Small Cap 250 Index, this is the small cap strategy, 10% of the portfolio. Axis Nifty 100 Equal Weight Index, this is for style diversification, 10% of the portfolio. ICICI Prudential Gold ETF or Nippon Gold ETF, which is just for a commodity for a hedging strategy, 10% of the portfolio. Motilal Oswal Nasdaq 100 ETF, it's a fund of funds. This has global tech exposure, again a choice for 15% of the exposure.
Sure. All right, I think that will be all for today. Thank you so much, Nisreen, for taking time out and helping our viewers with their financial portfolio queries today. And for our viewers, I'm going to leave you with our WhatsApp number, email ID, where you can send across your questions. Send us all your financial details so that it's easy for our expert to align your investments or help you align your investments with your financial goals. Thank you so much for watching. Goodbye.